The first spot Bitcoin ETFs begin trading tomorrow, and the floodgates for Bitcoin's next evolution in financial markets is about to open. So tomorrow, November 19th, marks a huge moment for Bitcoin's integration with traditional finance, as the launch of spot Bitcoin ETF options, specifically for the IBIT vehicle, mark the beginning of a new era for price dynamics, volatility, and institutional adoption. So options and derivatives at large are the foundation of capital markets, as they provide liquidity, price discovery, and risk management tools for participants, particularly for institutional players that drive a lot of the core of the market. And while traditional markets like equities and commodities have fully embraced derivatives, Bitcoin is still lagging behind. But this changes tomorrow as these ETF options enter the playing field, allowing market participants to get exposure in the options market to Bitcoin's price movements. So this matters, right? And it matters hugely because in traditional markets, derivatives are 10 to 20 times the size of the underlying market cap. If you compare that to Bitcoin, where the listed derivatives are less than 1% of the spot market cap, you could see what a stark disparity that is. The breakdown is Bitcoin's spot market cap is roughly $1.8 trillion. But if you add up the open interest in the options market, which is about $20 billion plus $2 billion from CME, plus perpetual swaps open interest of $16 billion, then you get a derivatives to spot market ratio of roughly 1%, if not less than that, as Bitcoin is now at $90,000. So Bitcoin derivatives are vastly underdeveloped, and this limits the market's maturity because there is a huge institutional demand for these vehicles from a hedging perspective and an allocation perspective. So why the disparity? Well, most Bitcoin derivatives are traded offshore or over the counter. Offshore venues like Deribit dominate the space, while US retail investors, who make up 44% of the listed equities options market, are locked out. And to trade OTC, participants must meet strict ECP criteria, restricting access to large institutions. The US equity markets are the largest, most liquid markets in the world, making up 44% of the $109 trillion global equity market as of Q4 of last year. And until now, Bitcoin has had no direct access to these liquidity pools. So listing options on Bitcoin ETFs brings Bitcoin into the largest capital market in the world and unlocks unprecedented opportunities because of this, namely liquidity and depth. The largest market makers and institutional players can now provide deeper liquidity and enable efficient hedging for Bitcoin participants, which means retail investors previously excluded can now join the derivatives market for Bitcoin, significantly expanding the investor base. And a robust derivatives ecosystem reduces volatility, improves price discovery, and allows institutional capital to engage with Bitcoin at scale. So the introduction of Bitcoin ETF options isn't just about one new product, it's about transforming the market. As derivatives markets grow, Bitcoin will follow the path of equities and commodities, where derivatives are 10 to 20 times the size of the spot market. For comparison, this move could push Bitcoin's derivatives market from 2% of its market cap today to something much, much larger. Again, 10 to 20 times the size, unleashing trillions of dollars in potential trading volume. So what comes next? Bitcoin is only in the first leg of its monetization process. Listing options on ETFs opens the door to the largest and deepest liquidity pools on the planet. Major market makers, institutional capital, and retail investors now all have the tools they need to participate at scale. The floodgates are open, and Bitcoin's financial future is just beginning. Buckle up. Thanks so much for watching. I'll talk to you soon.